Alibaba is down 6% today after the company reported its fourth quarter 2024 financial results, and I have had many people ask me to go through the earnings report here on the channel. So in today's video, that is exactly what we are going to do. We are going to discuss why Alibaba's stock is falling, the highlights from the quarterly report, and if the stock is looking like a buy today. So with that being said, let's just dive right into the video. Alright, so the first screenshot from the quarterly report says, this quarter's results demonstrate that our strategies are working and we are returning to growth. Our China and international commerce businesses realized double-digit year-over-year GMV growth. We are also excited by the accelerated growth of customers and cloud computing revenues related to our AI products. Alibaba Group delivered a strong quarter with revenue growth of 7% year-over-year. We repurchased $12.5 billion worth of shares, and our board of directors has approved a $4 billion dividend for the fiscal year of 2024. So right away, we can see that revenue did grow by 7% year over year, and the company repurchased 12.5 billion shares over the past year, which is a significant amount of the company's overall share count. So let's continue on to the business's highlights. And again, right here, we can see that revenue did grow by 7% year over year. However, income from operations declined by 3% year over year, which was primarily attributable to increased investments in our e-commerce business and retention incentives granted to Kenyao employees. So basically, it looks like Alibaba is investing more into its overall e-commerce business, and these investments are lowering the business's profit margins slightly year over year, and causing the income from operations to decline slightly year over year as well, despite the 7% revenue growth. Net income also decreased by 96%, primarily attributable to a net loss from their investments in publicly traded companies. Now, this right here is one of the reasons why I do not like the net income or earnings number here on my channel, is because net income factors in the unrealized gains and losses of stock holdings on businesses. This is also one of the reasons why Warren Buffett says that reported net income isn't really a useful metric anymore, because you can have massive swings like this in the earnings simply due to a stock being up or down within the company's portfolio. So what Alibaba did is reported their non-GAAP net income, which takes out the fluctuation in their stock portfolio essentially. And we can see that net income on a non-GAAP basis did still decline by about 11% year over year. Non-GAAP diluted earnings per share also decreased by 5% year over year. So on a per share basis, the earnings declined by about 5%. So again, it seems like the company's profit margins are declining year over year due to their investments back into the e-commerce business. Now, if we move on to the cash flow, we can see that operating cash flow declined by 26% and free cash flow declined by 52%. And Alibaba says the year-over-year decrease in free cash flow mainly reflected the increase in capital expenditures during the quarter, the majority of which reflected our investments in Alibaba cloud infrastructure, as well as a special dividend of 10.5 billion RMB from Ant Group in the same quarter of 2023. So last year, Alibaba did receive a large one-time dividend payment from the Ant Group, which did boost its operating cash flows and free cash flows last year. So this year, the company did not get this one-time dividend, so operating cash flows did decline quite significantly. Additionally, capital expenditures this year were higher because Alibaba is investing back into the business and into the Alibaba cloud, so their capital expenditures were higher. So the double whammy of lower operating cash flow plus higher capex did cause the free cash flow to decline by 52% year over year, but I do think that this does make sense. Now, moving on to the trailing 12 months figures here, we can see that revenue was up 8% year over year. Operating income is up 13% year over year. Net income is up 9%. Non-GAAP net income is up 11%. Diluted earnings per share are up 14%. And net cash provided by operating activities was $25 billion. And free cash flow was $21.6 billion, which was a slight decline year over year. So on a full year basis, Alibaba's revenue did grow by 8%. Its income from operations went up. Net income went up. Diluted earnings per share went up, and then overall cash flows did decline slightly, which I overall think that these are pretty solid numbers right here. So now let's move on to the segment revenue. And right here, we can see that Taobao and Tmall Group did grow revenue by about 4% year over year, and keep this number in mind for later on in the video. Cloud Intelligence or Alibaba Cloud did grow by only 3% year over year, but Alibaba did say that they are expecting the Alibaba Cloud to start growing at double-digit growth rates by the end of the year. So Alibaba Cloud in the first quarter did not grow very strong, but by the end of the year, they are projecting this growth to pick up quite significantly. Then we can see that the Alibaba International Digital Commerce Group grew by 45% year over year, and the Kenyao Smart Logistics Network grew by 30% year over year. So these two business segments are growing very, very well. Local Services Group also grew by 19% year over year, and overall, Alibaba did grow its revenue by 7% year over year. Now, moving on to the next slide, this is the cash returned to shareholders. And here we can see that Alibaba in the trailing 12 months has repurchased $12.5 billion worth of shares, which is a total of 156 million shares repurchased. Additionally, in the fourth quarter, they repurchased an all-time high of $4.8 billion worth of shares. And now the company is sitting on about 2.434 billion shares outstanding. And they did overall buy back about 5.1% of their shares in the trailing 12 months. And this is on top of paying about a 1.3% dividend right now. So over the trailing 12 months, they did return about 6.3% back to shareholders through organic cash flows and the cash on the balance sheet, which I do think is a good thing to see. And I do really hope that Alibaba continues to buy back shares aggressively because the stock is quite undervalued at the current price, in my opinion. So they can buy back a significant amount of shares, and I hope that they continue to do this. All right, moving on to the cash flow statement now. We can see that operating cash flow was $3.2 billion US, and then we can see that capital expenditures for the first quarter actually increased by 4x year over year to 10 billion RMB, which is about $1.4 billion US. So the company actually had free cash flow of about 2.1 billion for this quarter, which is about 50% of what the company had last year. And again, they had that large dividend payment from the Ant Group, and they had significantly lower capital expenditures last year. So the free cash flow in the first quarter last year was very, very high. However, it is worth noting that even without this Ant Group dividend payment and the massively increased capital expenditures, Alibaba did still produce $2 billion in free cash flow for the quarter. Additionally, in the trailing 12 months, we can once again see that $25.3 billion in operating cash flow and $21.6 billion in free cash flow over the past year now. So Alibaba is generating tens of billions of dollars in free cash flow still, and it is a free cash flow machine. Now, if we take a quick look at the balance sheet, we can see that cash and cash equivalents are sitting at $34.4 billion. Short-term investments are sitting at $36.4 billion, and the total cash balance is now sitting at $85.5 billion, and it did increase year over year. When we subtract Alibaba's liabilities, we get a net cash position of $61.8 billion. So this is the net cash position that Alibaba is currently sitting on. So you can see that they can clearly buy back a significant amount more shares if they wanted to, and in addition to this large cash balance of about $62 billion, Alibaba is also generating over $20 billion of free cash flow annually. So the company's balance sheet is very strong, it's very cash rich, and the company is continuing to produce a significant amount of cash for its shareholders. So now let's move on to the segment results in terms of revenue and adjusted EBITDA. So right here we can see that the Tao, Bao, and Tmall Group did produce about 38.5 billion RMB in adjusted EBITDA. The Cloud Intelligence Group, or Alibaba Cloud, also produced about $1.4 billion in adjusted EBITDA. And this is really where the company's profits are coming from. Because here we can see that Alibaba's International Digital Commerce Group had negative EBITDA of 4 billion RMB, and the Cainiao Smart Logistics Network also had negative EBITDA of 1.3 billion RMB. And finally, the Local Services Group had negative 3.2 billion RMB in EBITDA. So again, this is where the company's profits are actually coming from right here. And then they're using these profits to invest in these other businesses, which are clearly growing much more rapidly. Again, the Alibaba International Business segment grew by 45% year over year, and the Cainiao Smart Logistics Network grew by 30%, and the Local Services Group grew by 19%. So you can clearly see that these two businesses that are not growing very quickly but are highly profitable, Alibaba is using these profits and this cash flow to invest in these other businesses, and that is why they are currently not profitable, because Alibaba is investing in all of this future growth. And I do think that this makes sense, because naturally Alibaba would want to deploy its capital in the business segments that are seeing the most growth. So I actually think that Alibaba is being quite smart here. So now let's move on to the cloud segment business highlights, and this says, we are committed to our strategy of focusing on high-quality revenues from increasing public cloud adoption while reducing low-margin project-based contracts. So what Alibaba is currently doing right now is they're actually reducing their low-margin business contracts in their cloud segment, which is actually hampering the overall cloud revenue growth, but it is increasing the cloud's profitability. And right here, we can actually see that the Cloud Intelligence Group adjusted EBITDA increased by 45% year over year, even though the revenue only increased by 3%. And again, this is because Alibaba is reducing its low margin project-based revenue in the cloud segment and now focusing only on high quality revenues that have higher margins. So that is why there is a headwind on the top line growth for Alibaba's cloud segment right now. And while they're working through this period of running off their low margin contracts, the revenue growth will be muted. But once these low margin contracts are gone, then the revenue growth is projected to enter that double digit range once again, because they're not going to be running off revenue essentially. Then Alibaba also says, during the quarter, our core public cloud offerings, which included products such as elastic compute, database, and AI products, recorded double-digit year-over-year growth in revenue. And then at the bottom here it says, during the quarter, AI-related revenue experienced accelerated growth and continued to record triple-digit growth year-over-year. So there are business segments within the cloud group that are growing very strong. And it looks like the cloud growth, again, should pick up near the end of the year. So overall, it looks like Alibaba's revenue is continuing to grow, and it did grow 7% year over year. However, the company's profit margins, again, are declining year over year because the company is investing more money into capital expenditures and into the business segments that are growing quite quickly. The cloud segment is also seeing short-term headwinds as they are running off their low-margin business, but it is projected to continue seeing stronger growth in the second half of the year. So overall, I do think that this was a pretty good earnings report from Alibaba. It's not like a blowout earnings report or anything like that, but the company is continuing to execute on its restructuring strategy and focusing back on its core business while maintaining profitability and producing strong cash flow for its shareholders, which it is then using to buy back shares and pay a dividend. And again, Alibaba did buy back 5% of its shares outstanding over the past year. So to me, this all does make sense, and I do think that Alibaba's fundamentals are going to improve in the second half of 2024. So then the question is, why is the stock down so much today? Well, first off, I do think that it is kind of the headline of Alibaba's earnings declining by 11% on an adjusted basis year over year, and its overall earnings declining by 96% year over year. That headline alone will scare a lot of investors who do not want to actually dive into the earnings report and take a look at what is actually going on with Alibaba's business. Then the second reason why I think that Alibaba's stock is down is actually because of this tweet right here from Brian Go on Twitter. And by the way, I just want to give this guy a quick shout out and say thank you for sharing this tweet right here. And this says, I think it's more to do with the fact that the core business grew slower than the general market. Remember that China in Q1, online sales gained 12.4%. So that top line growth for Taobao and Tmall is significantly slower than the overall market. So it seems like other players are taking market share away from Alibaba. We'll find out when JD, MPNGF, and PDD report in the coming days. So it seems like the overall e-commerce market and online sales market in China grew by 12.4% year over year. However, remember that Alibaba's main business only grew by 4% year over year, so it seems like Alibaba's main e-commerce business is growing at a slower rate than the overall China e-commerce market, which could suggest that Alibaba is losing market share in its key market. And that could be also why the stock is seeing weakness today. So now let's talk about Alibaba's price today. Well, here we can see that the stock is currently worth about $191 billion on the stock market. So if we go $191 billion and we subtract the company's net cash position of $61.8 billion, then this means that Alibaba has an enterprise value of $129 billion today. Now remember, the company also produced $21 billion in free cash flow in the trailing 12 months, which overall means that Alibaba is trading for an enterprise value to free cash flow of about 6.15 today. Now, to put this in perspective, this means that Alibaba could return about 16.26% to its shareholders on an annual basis on the market cap today with the company's organic cash flows that it is producing right now. So basically, if Alibaba wanted to return the cash on the balance sheet plus all of the free cash flow back to shareholders in the form of a dividend, then Alibaba could pay about a 16% dividend on the market cap today. Now, this is why I think that Alibaba's stock is so cheap, because a 16% yield on a stock tells me that it's not actually pricing in any future growth. Because think about it, again, if Alibaba wanted to, it could pay a 16% dividend to its shareholders right now. And a 16% dividend is a market-beating return. So that is what I mean. The stock is not factoring in any future growth because it could already deliver a significant amount of returns and a significant amount of capital back to its shareholders on the price today. So all future free cash flow growth, I do not think is being priced into Alibaba's stock in any way on the share price today. And that is why Alibaba is in my own portfolio. And that's also why I am saying that the little amount of growth that Alibaba is seeing is still a good thing for the business relative to its price today. Because again, I don't think that there is any growth reflected in Alibaba's market cap today. So all of the growth that the company is actually seeing is kind of suggesting to me that the market is undervaluing the stock and undervaluing the company. And because of this, I am going to continue holding on to my Alibaba shares within my portfolio, and I don't plan on selling them anytime soon. However, I am also happy with my current exposure to China in my portfolio, and I'm not looking to increase my overall China exposure. So at the current moment, I am not looking to buy any more Alibaba shares because I simply don't want more exposure to China in my overall portfolio. But Alibaba, in my opinion, is too cheap for me to ignore, and that is why it is in my portfolio. And I simply think that if the company can continue to grow its revenues and its profits over the long term, then today the price looks absolutely silly. And I do think that it could return pretty high returns over the long term. So those are my thoughts on Alibaba's stock, the Q1 report, and the share price today, and as well as why the stock is down. And if you enjoyed this video, then please remember to leave a like on it because it does really help out my channel and get my videos in front of a wider audience. Additionally, if you're new here and you want to stick around and see more stock market related content like this, then please consider subscribing to my channel as well, because that would be pretty cool. And lastly, if you do want to get even more content from me, follow all of my personal portfolios, follow my buys and sells, gain access to my Discord community, and a bunch of other additional features, then you can check out my Patreon and become a Patreon member. My Patreon memberships have been growing quite significantly, and people have been giving me a lot of great feedback on all of the Patreon-only content that I have been posting over there. So again, if you would like all of this additional content and getting even more content from me, then seriously consider checking out my Patreon. And by becoming a Patreon member, you are also supporting my channel in the best way possible. So thank you to everyone who has recently become a Patreon member or who is a Patreon member. I truly appreciate you guys, and I cannot thank you enough. But with that being said, that is going to wrap up the video for today, everyone. So thank you all so much for watching. I truly do appreciate it, and I really hope to see you all again in my next video.